My name is Paige Loheis, and I am the Marketing and Events Manager for sFOX. And we're excited to welcome you to our AMA session, where we will take a deep dive into the sFOX platform, showing you how to get the most out of our full range of product offerings. From practical guides to hard data, we will give you an insider's perspective on how our spreads and order book depth compared to other trading venues. Jack and Chuck, it's great to have you here today. Can you each tell us a little bit about your role here at sFOX?
Yeah, thanks, Paige. Jack Finio here. Thanks, everyone, for joining. Head of product at sFOX. I've been with the firm for just over a few years now. Prior to joining sFOX, founded a quantitative systematic crypto fund. And before that was still in the blockchain space at another startup as well. So yeah, I've been in the space for a while, and my focus is mainly on products and in trading and execution.
Great, thanks, Jack. Hi, everyone. My name is Chuck Lugay. I'm head of execution services here at sFOX. I've been with sFOX for about a year and a half now, maybe a little more than that now. My background really was in execution within the traditional finance markets. So I spent a large portion of my career with firms like Citadel and Knight prior to becoming Virtu. And most of that time was spent within the execution aspect, electronic execution for equities and options. So when I made the transition into digital assets, it was a fairly smooth transition, and I saw a lot of similarities to the space, which I was happy to really build on. And currently, I'm working on business development within sFOX as well, and I'm really happy to share some of my experience with you guys today.
Great. For this session, we prepared an insider's perspective on how to capture alpha through the sFOX platform. We want to remind everyone that we will have time for questions from the audience towards the end, so please feel free to submit any questions you may have in the Q&A box, and we'll do our best to get them answered. Jack, you've been building new sFOX products and features for years. Can you tell us how the sFOX community informs the product roadmap? For example, have any specific client needs or feedback inspired particular improvements to the sFOX platform?
Yeah, thanks, Paige. And yeah, I mean, we really learn so much from our clients. I think one of the unique aspects of sFOX is that our incentives are really aligned with our clients. So we strive to build very long-term partnerships with our client base, and that involves regular meetings and discussions with our clients' teams. But I think order types are kind of a great example of maybe how client feedback kind of informs product changes. Many of them were built kind of directly in an effort to automate or improve something that our clients were doing manually before, or improve upon something that they were currently doing. I think hair is a perfect example of that, or hair order type. As a passive trader, you're constantly placing, replacing limit orders, trying to stay competitive within an order book. And hair kind of does all of that for you, so you can maintain kind of that passive execution nature, but the algorithm itself, does the job of canceling, replacing, maintaining competitiveness, canceling and replacing to different exchanges. And again, yeah, that was built kind of in direct response to something that we noticed that some of our clients were kind of doing manually on the platform or other platforms previously, and stepped in to kind of make their lives a little bit easier.
Great. Chuck, from the other side of the business, every day you're speaking with prospective sFOX users and current clients benefiting from sFOX's suite of services. What are some of the features you've seen give clients an edge over other crypto investors? And what are some of the most frequently asked questions or points of confusion about the sFOX platform?
Yeah, thanks, Paige. And I think that just first and foremost, I think that access to a very unique and deep pool of liquidity is one of the greatest points that we bring to the table for entities that trade within the spot crypto market. No place else can a client connect into one platform and have access to a huge pool of liquidity. You're talking, multiple billions of dollars worth of liquidity per day, and only have to face off against one counterparty. We try to make it as turnkey as possible for businesses that want to get into the space. So when a client connects with sFOX, they're facing off against one entity, which is sFOX. They only have to work on one workflow and one connection with sFOX. In terms of treasury management, it makes it much more simple for them to run their business because they're only settling with sFOX, and their treasury commitment is only with sFOX. Additionally, we have a world-class custody product called SafeTrust, which our clients are able to pair along with the trading platform. So the combination of the two really give our clients an edge when it comes to trading within the spot crypto arena. One of the areas of confusion, a lot of times people that I speak to say, well, is sFOX an exchange? No, we're not an exchange. We're an aggregator. But what advantage that they have in terms of working with an aggregator like sFOX is that they can get to multiple pools of liquidity with one connection. And if one pool goes down, if one exchange goes down, we're able to route orders to other liquidity providers within that space to fulfill their orders. So it's really a one-stop shop when it comes to trading in the spot crypto arena, and I think it's really resonating with the institutions that we're doing business right now.
Awesome. Well, we've definitely compiled a list of topics that frequently come up when traders are trying to understand how to get the maximum benefit out of the sFOX platform. As we go through these questions, Jack, I'd love to get your perspective on how the product functions. And Chuck, I'm eager to learn your thoughts on how you've seen these considerations come up in your own client conversations. Jack, what would the benefits of trading with sFOX over trading with any other single venue be?
Yeah, great question. And obviously, as a prime broker type platform, there's definitely key benefits kind of throughout the trade life cycle. Chuck already alluded to, the fact that we have both custody and trading kind of within one platform. But yeah, we're focused on alpha, so I'll key in on kind of the trade execution side. Chuck mentioned that we aggregate liquidity from all of these different exchanges and OTC venues, and with that, you get best price execution and a deeper pool of liquidity. But for best pricing, the venue with the best price changes drastically throughout the day. So let me actually pull up an example to show you guys what I mean here. All right, so what we're looking at here is the best offer price on BTC USD across Coinbase, Gemini, and Kraken just over a few hours earlier this week, right? Just to kind of illustrate this point. And you can see here, in terms of pricing, over the first 20 minutes or so, Kraken has the best price to buy. Then it's Coinbase for about an hour or so, then Kraken again, then Gemini, and so on. And these are pretty large differences. They're reaching up to $100 in some cases, maybe even more. But with sFOX, because we're aggregating pricing from all of these venues and more, the best price is always right in front of you, right? You click buy, and that's always going to the best venue with the best price. And that kind of leads into a second point around treasury management, right? To execute at the best price on your own, you would also have to manage your balances across these venues, which is very difficult. The venue at the best price is changing throughout the day. To maintain kind of treasury on the venue with the best price across all of these different exchanges and OTC venues, that'd be a lot of transactions throughout the day for a single kind of trader. But at sFOX, we kind of do all of this for you, right? Throughout the day, we're rebalancing across exchanges, settling with OTC desks so that liquidity is always available wherever the venue with the best price is. I think that's really powerful. It gives our clients a really key advantage and even in efficiency, right? To the ability to focus on that alpha generating strategy and allow sFOX to kind of handle the rest of that trade life cycle for you.
Definitely. Well, based on this slide showing the best offer price, what are the arbitrage opportunities across the platform?
Yeah, another great question. So yeah, crypto is still inefficient, even in pretty liquid markets, right? I think it's an interesting result of just the sheer number of exchanges and just liquidity venues that there are within crypto. And so spreads are often inverted, which represents an arbitrage opportunity where you can buy at a price lower than you can sell. So let me pull up an example here. Again, just using BTC USD. And I've just pulled about a week of top of book spread data from our order book from about a week in June. And you can see that even on BTC USD, we can see spreads invert by over 30 basis points in some cases. In fact, year to date, spreads are inverted roughly 16% of the time by an average of about 4 basis points. So, year to date throughout the year, 10% of the day, 16% of the day, these spreads are inverted. And that doesn't just add value to arbitrage traders either. It's also kind of a negative slippage factor for more passive traders where you don't have to worry about paying the bid-ask spread as a taker. You can execute quickly, taking liquidity, but not, the spread is inverted, so you're not eating into the order book or crossing that threshold. And actually, ETH USD is a similar story, inverted a little bit less percent of the time, around 11%, with a kind of slightly lower magnitude, around 1.76 basis points. But again, over the same week in June, we're still seeing spreads invert pretty widely, almost reaching 40 basis points in some cases. So there's a lot of opportunity to capture these with sFOX. These are simply presented to you. We allow spreads to invert. This isn't something that you can get on an exchange, because when a spread inverts on an exchange, that would be a trade. But yeah, we have plenty of arbitrage clients that are simply taking advantage of these inverted spreads on the platform.
And Paige, just to add to that, I think that this is a very important point, especially from the viewpoint of traders coming over from the traditional markets. They're used to a very, very regulated market structure over there, where there's a thing called Reg MS, and there's a national best bid and offer. There's no such thing as that within crypto, right? So what we've done here basically is built a de facto national best bid and offer, where you're able to access the best price at any given time, but also with the added benefit of being able to take advantage of these arbitrage opportunities. So that in of itself has resonated nicely with traders who are making that move over from the traditional markets into crypto, and they've seen a lot of value in that.
Great. Well, with the added benefits of the arbitrage opportunities, can you explain a few different algos sFOX has built, and what are their specific features?
Yeah, another great question. So I think Chuck and I are both kind of alluding to this. Our goal is really to take care of a lot of the execution issues, for our clients, right? Part of that is building the order type itself. The other part is giving our clients kind of greater control about how the order executes specifically according to their own parameters. So I'll give a couple of examples. We have a suite of 15 plus order types and execution algorithms, so I'll save the full list for another time. But one, TWAP, a time weighted average price algorithm, usually kind of pretty boring, straightforward in traditional markets, right? You're just splitting up an order over time, trying to kind of take advantage of a time weighted average price. But we wanted to kind of give our clients some greater control and allow them to use a TWAP to their advantage and meet kind of their execution criteria. So on top of that, you also have the ability to customize how a TWAP order executes. We have a couple of different options here. One is post only, so you can actually specify that your TWAP order would only execute as a maker. So you're trying to take advantage of changes in price over time and splitting up the overall size of your order, but still not crossing the bid-ask spread. The other option here is a continuous execution option in the TWAP algorithm, where basically we're trying to execute as many trades as possible in as small size as possible over the total time of the order. So you're not just kind of evenly splitting up the TWAP at regular intervals with regular sizes. It's just kind of continuously executing to avoid as much slippage as possible as a taker. I think a couple of other interesting algorithms that we've rolled out recently were our stop triggers other and trailing stop triggers other algorithms. These are conditional orders that allow our clients to leverage other order types within the sFOX suite of algorithms. Typically, you're using a stop or a trailing stop as either a risk management kind of parameter on a position or a take profit level. But typically with an exchange, you can really only execute, once those orders triggers as a limit order or a market order. And with stop triggers other and trailing stop triggers other, our clients can specify the algorithm they want to use when that price level triggers, so that they can, either, use a TWAP to kind of break up that execution over time, or even, a hair algorithm, so it's only executing passively. So it just gives our clients a lot more control over exactly how they want to execute given the market conditions. And then, final point there, with each of these order types, there's plenty of kind of additional parameters that our clients can use to essentially, you almost set it and forget it, right? They don't have to worry about kind of typical execution risk that you would see with another exchange. We have a wide set of time and force options, like GTC obviously, but GTD, good till date, so you can set an expiration date on your order, fill or kill, and even our max slippage parameter for IOC orders, just to ensure that no matter how the order book changes, in flight with the order, that you're not going too deep into the order book at any given time.
Great. Those are great examples. I'd love to hear from both your perspectives on which algo you would recommend if a client was to place a large order that was more price sensitive versus time sensitive.
That's a great question. Yeah, so I guess I'll start at the top here. So with a large order, typically your main concerns are around slippage. You don't want to eat in too much depth into the order book and get a bad price, but also information leakage. If you're buying 1,000 Bitcoin and you place a limit buy order for 1,000, right, other traders are going to trade against you, and you're leaking information to the market that allows other participants to essentially get you a worse execution on your order. So with price sensitivity, you want to avoid paying the spread. So that means kind of prioritizing maker orders, maker trades, and then avoid slippage. I think one of the best order types for this is our Gorilla algorithm. It's post only, so you never cross the bid-ask spread, but it also only shows portions of the total size at any given time. So that 1,000 Bitcoin order only shows, let's say, 5 Bitcoin at a time, so that other market participants can't see the overall size. Then, to get into a little bit more aggressive, but still maintaining that price sensitivity, I think our polar bear algorithm is great. It's taker only, but it only takes from the top of the book, so there's a lot less slippage. And because you're only taking very small portions at a time, you're not, again, leaking kind of that overall size of your position to the market. For a more time-sensitive parameter, I think, you're trying to execute with more reasonable slippage, but get into the market or out of the market quickly. And that's where I think Sniper is a great option. It's a taker-only algorithm, but it's only going to take up to your order limit price and then hide any unfilled size in the dark pool until either it gets hit in the dark pool or other taker opportunities become available. So yeah, that's generally what I would recommend. Maybe would love to hear, Chuck, if you have anything to add there.
Yeah, I think that all of those points are great, and the tools that are available within this suite of algorithms, which is readily available on the platform once you integrate. There's no additional fees or anything like that in order to use the algorithms. Gives seasoned traders the ability within this particular trading ecosystem, the ability to really control the way they access the markets, the ability to actually be able to work a large order without having to lift the kimono, so to speak, and show your overall intent is tantamount within this space, because you really don't want that information leakage out there. So being able to use that polar bear algorithm where it's a taker and you can hide the balance of your order, or a size order like Gorilla, it's invaluable to achieve the alpha that our clients really need to achieve for their end clients. So it's definitely a good value added tool on the platform, and we're constantly tweaking these algorithms and adding more in order to serve our clients better.
Right. Well, speaking of time sensitivity, Chuck, is there a limit as to how many trades a client can submit at a given time?
Yes, and we've constantly been upgrading this as well, Paige. And right now we can do 60 orders per second. The minimum size is $5, and there's no maximum size. This is something that Jack has been working diligently to improve, because I think as volumes pick up and as interest within the space picks up, it's something that's going to have to continue to get more and more robust with the introduction of more active traders within the spot crypto arena.
Nice. Chuck, how does instant settlement work if sFOX has to settle with the exchanges or OTC desks after the trade is already executed?
Yeah, it's a good question, and something I alluded to in the beginning as well. I mean, I did mention that sFOX is really the counterparty that our end client is facing off against. We're the central counterparty. So even though we're routing our clients' orders to multiple exchanges, multiple market makers, they're still only facing off against sFOX. So because of that, we can settle with our clients instantly, and it just completely alleviates the hurdle of having to settle with multiple counterparties for our clients. So it just becomes a much more efficient use of their time and energy within their trading, and it allows them to concentrate more on alpha generating ideas rather than having to deal with back office settlements. So we take care of all the heavy lifting in that regard.
Love it. So following up on that, Jack, can a client trade assets instantly from safe custody, or is there a lag time?
Yeah, great follow-up there. There is no lag time, right? The platform essentially operates the same whether you are using safe or not using safe. You can trade instantly from custody. There's no need to kind of transfer assets from a custodial account to a trading account. Those assets are available to a trade immediately. And like Chuck was saying before with trades, right, your balance will change. Changes will still be reflected instantly on the platform. However, it is important to note that the trade proceeds itself won't be settled necessarily real time. So while your account will reflect the accurate kind of reflection of your portfolio, we're settling kind of back to safe trust throughout the day. At worst, this would be kind of end of day, but again, this is a process that the team is running multiple times throughout the day. So while the proceeds themselves won't be settled instantly, you'll still see that in your account and will be settled shortly thereafter.
Awesome. How long does it take for sFOX to generate a report on each of my trades?
The answer to that is instantly once it's done, Paige. I mean, we have a functionality on our user interface and also when clients write to our API, where once a trade is done, you can go to a history tab within the user interface and click on analysis for an individual trade, and the user interface will generate a report, a post-trade analysis immediately that will reference different benchmarks such as risk transfer price, exchange index, VWAP, arrival best offer, and final best offer. Gives the client some insight into whether or not the order was handled more passively or more aggressive, and it provides these benchmarks immediately, and you're able to download them into a Excel format so that they can share them with their end clients. So, and then that is immediate.
Awesome. Wow. Everything's so immediate. I love it. So, Jack, what policies, procedures, or controls does sFOX have in place to manage counterparty risk against exchanges?
Yeah, another great question, Paige. So I think there's kind of two sides of this, right? As Chuck mentioned, right, we maintain a very diverse and wide range of liquidity providers on the platform. Part of that is ensuring that we have the most competitive venues with the most competitive pricing and liquidity available to our clients at any given time. The other side, of course, is counterparty risk, right? So we are constantly both evaluating new and existing liquidity providers that exist on the sFOX platform. Before we add any new LP, they go through a very rigorous review process. Again, we're constantly monitoring those existing liquidity providers for any sense of a higher degree of risk. And then we mitigate that risk as much as possible, right? We limit the amount of capital that we keep on exchanges to an absolute minimum. We limit, individual exposure to each OTC venue, and then constantly kind of rebalance treasury throughout the day so that both liquidity is available, but risk is managed accordingly, across all of these venues. And our very hardworking team is working 24/7, monitoring all these venues as well, just in case anything happens. But yes, we have kind of top down controls, both to ensure the quality of pricing and liquidity that's on the platform, as well as the safety of our clients' trades.
Great. Well, we're starting to see a lot of great questions come in from the audience. If you're listening to this episode live, feel free to continue sending your questions to the Q&A box, and we'll try to get to them today. I'm going to kick it off with the first question. Where will my limit order prices be displayed?
Yeah, that's simply, in the user interface of the platform, there's an open orders tab where you can review, all of your existing orders that have not been completed yet. You'll see a limit price field, in that component, as well as, the trigger price, if applicable, for that order.
Awesome. What happens to my order if an exchange goes down in your order book?
Oh, that's a great question. Yeah, I think this is, one of the more difficult aspects of, us kind of managing these integrations with all of these liquidity venues, but just, trading in the space generally, right? Exchanges go down often, venues aren't available to trade. And that's definitely a key benefit of the sFOX platform. Not only do we kind of allow you to continue to trade if a single venue goes down, right? Because we have, many different liquidity providers per market, but we're also managing those in-flight orders, right? So if an exchange is unavailable while an order is working, that simply for us means that we're routing around that venue, right? Any trades that exist, kind of on that venue are essentially considered kind of dead, during that time. And any new trades are just, we avoid that venue while it's down. Once it comes back up, we automatically kind of get that notification via our integrations and turn them back on in the order book.
Awesome. Are there any stats on the depth of book between sFOX and a typical crypto exchange?
Oh, excellent. Yeah, let me actually pull up another example here and show you some data on this. All right. So yeah, this is just a kind of snippet of year-to-date data, looking at, again, BTC USD and the effective spread, as well as depth within just the top 5 entries within each one of these individual order books. So, because we're aggregating this liquidity, you can see that, sFOX on the left-hand side here, not only do we have multiples, deeper liquidity within, a very tight range in the order book, you're also getting a much tighter spread, right? And for our clients, this allows you to, execute much larger kind of individual orders than you could on a, single venue without eating into too much of the order book or causing too much slippage, and, still maintaining a very competitive price. So, we're certainly aiming to allow our clients to really scale their strategies, whether they're starting small or coming in with large size. They can operate at scale or easily scale up their execution on the platform because of this.
Great. Does sFOX provide ability to auto trade using scripting tools for owned strategies like MT4 or similar?
Yeah, excellent question. So this mainly depends on where you're automating trading. So I think MT4 is a good example. I don't believe that MT4 currently supports an sFOX integration, but this is again more up to the tool itself to support that. We don't support kind of the strategy automation itself natively on our platform. But for third-party providers, that's really up to them who they integrate with. We are, I think a few of them do support sFOX. And again, if there's any kind of specific tools that you're currently using, please do reach out to our team. We'll either be able to connect with the team at that third-party tool, or point you in the direction of another tool if possible.
Awesome. Can a trader trade for their clients through a limited POA using sFOX? Will the client have access to daily activity like monthly statements for accounting purposes?
Absolutely. So on sFOX, we have a feature called separately managed accounts, or SMA, where you or your client can onboard directly to the platform, can add you as an advisor to that account, and then yourself as a portfolio manager can access that client account directly with the permissions that they've granted. That individual client can still directly access that account, view statements, view activity, view their portfolio, and that's applicable not just to kind of a wealth management use case like this, but also single funds that are running multiple strategies. You can use that feature to kind of manage almost sub accounts within the platform and separate the trading across different strategies.
Great. Well, that's the end of our Q&A section. We've definitely touched on how versatile the platform is today, as well as current product offerings. So I have one more question for the two of you. Looking towards the future, what does the roadmap for sFOX look like?
I love it. I think, on one hand, really our focus is expanding kind of the products and opportunities that are available within the sFOX platform. That comes in many shapes and sizes, obviously. Specific to trading, though, that means, supporting more assets for spot trading, expanding into derivative markets, expanding kind of our geographical reach as well. And I think, with that, there just comes the additional opportunity that a platform like sFOX provides, with aggregated liquidity and best price execution. So really excited about rapidly expanding kind of just the tradable products within the platform, but also, expanding kind of the value around trading itself, whether that's, us kind of moving more into Web3 and enabling our clients to kind of explore that universe a little bit more, or the opportunities to, leverage your assets while you're not necessarily actively trading.
Additionally to that page, I think that we're working tirelessly to make sure that once there's more of a clear picture from a regulatory standpoint in the space, and traditional finance comes over and adopts the asset class more so, that we provide a trading platform that they feel comfortable with, that they have familiarity with, based on what they've done before. And I think that's one of the things that was most striking to me when I first made the transition here, is that I think sFOX is ahead of the curve when it comes to building a platform that caters to that particular market, so to speak. So I'm really looking forward to how this sector really evolves going forward.
Great. Well, that concludes our webinar for today. Thank you to our panelists, Jack and Chuck. This has been very informative. And also thank you to everyone who attended. We hope you learned something new about sFOX. Side note, today we launched some summer promotions, so keep an eye on your inbox for more information on that, as well as the recording from today's episode. We will be running these AMA series every month on different topics, so look forward to seeing you all soon. If you have any follow-up questions that we didn't get to today or come to your mind once this is over, reach out to the sFOX team to learn more. Bye, everyone.